You are listening to ChartingWealth.com Market Review for Thursday, the 9th of April 2015. This is where the market ended up on Wednesday. You can see that we're trying to draw a little trend line there. We don't have a crossover going up yet on the MACD, our favorite indicator. Just got finished recording an audio recording for you. You'll see posting soon under the blog on both Twitter and on Facebook. But we explain more of what the MACD is about and why we use it. That's just one of several classes that we will be having on it. It's only a couple minutes long. Please listen to it when you see it post. But you can also see the derivative oscillator is backing off. It looks like the market's trying to move up. Don't forget that April is a strong month typically for the market. It ends the 6 strong months, strongest months for the market. If you don't have a copy of the Stock Trader's Almanac for 2015, you need to have one. You need to have it every year. I use it all the time. That's what it tells me, and that's what's shown by the numbers. Now, looks like it's trying to move up. Don't have any confirmation yet on the 2-day chart. However, let's go back to and again, we're looking at IYY, the total market. Look at what's happening here. Looks like it's stalling out. Whenever we see 3 days of indecision, and nothing has pushed above this last candle back on the 7th. We've got, not 3 days, I'm sorry, it's 2 days of indecision. Well, almost coming over to another half day. This 4-hour chart is, of course, a half-day chart. So for each 2 of them, doesn't take a math genius to figure out 2 takes a day if it's a half day. So we have 2 days here, but we have a stalling pattern going in. We do have the derivative oscillator. You can see how it's backing down a little bit. This movement is a little bit shorter than that movement. And we do see that the MACD is pretty much holding its own. It's crossed over the 50-period moving average. Again, if it's a half day and there's 50 of them, it would be 25 full days. Again, no math genius needed there, but you can see it. We'll just have to see. It could just be backing up, absorbing the gains over these 2.5 days. We will just have to see. We don't, as we just talked about on the 2-day chart, have any crossover going up on the MACD. Whenever we look at a bigger chart, please remember, always think of charts as waves. And when you have a bigger chart like the 2-day chart, whatever it's doing, it is bigger than the 4-hour chart. So it is still in a down pattern. It looks like that down pattern's weakening, hasn't turned over yet. And you can see here over these last 2, 4, 6, 8 days, nothing is moved above this down movement. So it could accelerate right back over and start moving down again. Like we said, April is typically a month that does well in the market, but again, that's just typical. That's not necessarily this April. Look, we have been in a down move for many, many days now. Now, let's go from that chart, the total market, to the SPY. This is the Standard & Poor's 500. This is that shows us what's going on with those 500 big companies. And again, you can see nothing has risen above this red candle back on the 27th on that 2-day period. What happened over the last day or so, you see that it has not moved above that. Again, looks like it could be a stalling pattern, although the derivative oscillator is backing up, and the MACD does appear to be moving toward convergence. That means coming together. Divergence, like here, means growing apart. So could be that it's getting ready to continue moving up, but we'll just have to see now. Let's see, do we see the same pattern in the 4-hour chart? We do. We see a doji right here, lots of indecision. And again, the way you look at these things, when you look at these Japanese candlesticks, and you can read about them, we're going to have classes on that also. But the cool thing about the candlesticks is they tell you a lot of things. You can see sentiment. You can see how the bulls tried to push the market up, but the bears pushed it down. Here, the bulls and the bears pushed it up and down the same, and we're able to drive it back to the center with virtually no movement. What does that mean? Well, it means a lot of indecision. Everybody's about as strong as the other. So which way is it going to go? Who knows? Derivative oscillators falling back a little bit. Again, really don't have a convergence here, continuing to move up. it is a lot of indecision right here on which way the S&P is going to go. Again, if you fall back and look at the strong chart is still in a down movement, although it does appear to be weakening. So continue to watch the S&P, see where it goes tomorrow, and that is Thursday, just what's happening. And now let's go to my favorite chart. This is the Qs, the cubes. This is QQQ. It is the NASDAQ 100. And you can see same thing happening, broken our trend. We still don't have a crossover. We do have a weakening, it appears. If we revert back to the 4-hour chart, we can see, oh, look at that, continuing to move up. Nice pattern. Nice pattern on an up move. Actually getting further apart, diverging, not converging, and look at that. You can see where the derivative oscillator has continued to accelerate. Again, nice move over here and a continued move up. But you can see here we go, there's a bunch of indecision, market going down, lots of indecision, then started going up. We do have a crossover, of course, of this is the blue line is the 2-day trend line on the Qs. Nice crossover on that, giving you more of a feeling that that is a strong up move, penetrating the prior down move on the 2-day chart. So looking good on the Qs. Now, let's do our last chart. And in that, we always go where? To gold. Gold is interesting. I love gold. What we see here, this is the 2-day chart. And you can see we had to actually move. We originally had our trend line drawn up here. We had some falling off, and then we redrew it. Looks like it's continuing to hold to that line. Now, you can see what happened on the last candle. What do we have there? Major indecision, another doji. Means the bulls pushed it up about as much as the bears did, and they each pulled it in the other direction. I'm sorry, bears push down, bulls push up. And they ended up about where they started. So what does that mean? Lots of indecision. So let's drop back from the 2-day chart and look at the, oh, interesting. We've been talking about this over the last few days. In fact, you can see how weak the crossover was going up, accelerated a little bit. Now it's crossing over, going back down. How powerful is that? Well, you can see how decent the 4-hour chart has been, but for over in this area, how decent it's been in showing trends and changes over. So got a little interesting in here, but we do have a falling off, and you can see that the MACD has crossed over going down at the same time the derivative oscillator has. It's touching the 2-day trend line. Just have to see if that's broken, along with this crossover showing you that that might be some real strength moving gold back down. Of course, we talked about if you got in gold back anywhere in here before it started this upsurge from about 111 all the way up to what, the high a few days ago of 116, you did pretty well on that run up of gold. Let's see if we see any ceilings back here. Not really there. No. Interesting. Well, this may be a real fall off in gold to go back down possibly and try some of these other lows. Could even drop down into this area here and try that. We'll just have to see how it's going to set itself up. But right now, we do see on the 4-hour chart a crossover going down and the MACD, and we've already crossed through our moving linear regression lines. So gold appears to be making some moves to go back down. Hopefully you already took your profits that you made in through here. In fact, hopefully you already took your profit in here instead of risking this down move at that point. It's already tried to go down and bounced off, so we'll just have to see how strong the gold bugs are. Anyway, that is our market review for Thursday, the 9th of April. Thanks so much for joining us. Good trading. All the best.